Welcome to Wall Street Confidential. It is Friday. We are looking forward to the weekend, but there's a lot of news to cover. And for those bears out there who might think oil is going lower, there is some fresh evidence out. StatoilHydro missing its 2007 oil and gas production, and this might have evidence of why oil is going to go higher. Okay,
first I want to distinguish between the extreme short-term guys, oil's down a couple of bucks, and the longer-term view. The longer-term view is that down a couple of bucks, you're still at 88. This was, without a doubt, the single best time for oil to have gone down. Peace in Nigeria. Iraq, we know, is much more stable, reluctantly, for some who think that the whole initiative was bad. Iran, obviously, taken off the table. We have a slowdown in the U.S. economy. So this is when oil should have fallen to 80, 70. I think it didn't because of stories like Statoil. Now, Statoil itself, and if I were a bear, I'd say, oh, Cramer, come on, Statoil is this little Norwegian company. No. Statoil is a major producer in the North Sea. And, you know, when you start thinking about the North Sea being as one of the largest finds ever, along with Prudhoe Bay, you realize Prudhoe Bay, oh, it's obviously tapped out. Now North Sea tapped out. The essence, and I think that they didn't really explain it exactly in the press release, but the essence of what happened with Statoil is they have to drill deeper, more expensively, to get at the remaining oil in the North Sea. Well, there we are again. If the North Sea's running out, Prudhoe Bay running out, Mexico not replenishing, Venezuela, I know people feel like that Chavez lost some sway this week. That's ridiculous. He's a dictator. You don't lose sway until you're killed. I feel, or so driven away. I feel like that what's happened now is the Statoils are something you better get used to seeing. We are going to see all the major deposits being depleted and no new large deposits replacing it. For every North Sea, which is gigantic, we'll have a little Petrobras find, but it's supply. And I'm going to stay on supply. And there are people, including Street.com, have been saying, well, look, Saudi Arabia could drill more. Well, that's no. And the reason why you know that is Saudi Arabia wants the price lower because Saudi Arabia has tried to keep the world hooked on oil. It's really important for the fundamental political outlook. So the fact that no one can capitalize on this higher oil price, and yet people still insist that it's speculation is just fanciful.
Now, looking at the Transocean deal, when that materializes, do you think that once they sort of become this big, huge force, that the drilling excavations, the drilling journeys, that we're going to be seeing more oil come?
No, because there's not enough rigs. There's not enough rigs, and it takes a long time. The idea that you can just build a lot of rigs fast, we've seen as fanciful too, and they also are very expensive. This is a very capital-intensive industry where many of the participants didn't believe that oil would be this high. And the fact is that if you did want to take advantage of the higher price, like Conoco, which believes in the higher prices, you can't turn a switch unless you're the Saudis. And it turns out that the Saudis can't turn a switch either because there's not enough. It's supply, supply, supply. I do not care about the demand side. That's just going to be fine.
All right, you heard it from Jim Cramer talking about oil, and it is a supply story. Thanks so much,
Yes, it is.
You're watching Wall Street Confidential, and remind you, Jim Cramer's brand new book, Stay Mad for Life. You can get it now in bookstores, and also if you check out our site, you might learn a way to get it for free.
Yeah, good idea.
Thanks a lot, Jim. Have a great weekend.